Hey guys, and welcome back to the ASX Investor Channel. And welcome to once again another ASX CEO interview. Today, we're very excited to be welcoming back to the channel the CEO and Managing Director of Lake Resources, Steve Promnitz. Lake Resources is a company playing in the lithium space. They're leveraging an innovative direct lithium extraction method, and it's a really exciting opportunity. They play in the lithium triangle with their flagship Kachi project, but they've got a range of other projects as well that they'll be looking to bring online. It's an exciting time. We're looking forward to unpacking the story. Steve, welcome back to the channel once again.
Thank you so much. It's great to be back and great to speak to your listeners again.
It's always a pleasure. For those who might be new to the story and wondering who Lake Resources is, what do ASX LKA do? Can you provide that overview about who you are?
So Lake Resources is in the lithium space, and lithium is facing a major increase in demand and a shortfall in supply. There are a number of companies in the space. What we do that's different is that we're in development. We aim to be in production in 3 years' time, producing one of the highest quality products available, and that means a healthy cash margin. Doing that with an ESG benefit, that means small CO2 footprint, small water usage, small land footprint. These are really important for electric vehicle makers. And then last of all, being able to expand, because we use a modular process, able to expand to meet that demand. Honestly, since we last did this interview, the demand has just increased. At that time, it was estimated to be about 10 times over the next 10 years. Now that's looking to be north of 15 to 18 times. So the numbers keep growing. There's a real opportunity for all lithium producers and developers, but certainly we're producing a product that the end user really wants and needs.
It's definitely a fascinating time. I saw a note from Macquarie that came out about a potential perpetual deficit in the lithium space. We'd love to just hear a few more reflections about some of those trends. We know about the EV adoption, but what's happening on that ESG side, and what are the end users actually wanting, and how is Lake positioned to really take advantage of that?
The forecasting, it's always a little bit hard to estimate those things. So we look at growth in electric vehicles, but one of the more granular numbers that Benchmark Mineral Intelligence use is looking at the number of battery megafactories. Now they have increased from 70 in 2019 to 220 in the next 10 years, of which 151 will be in production by the end of this calendar year. To feed that demand, that's about 3.2 million tons of lithium carbonate equivalent. And last year, we only produced 300,000. So there's a lot to go. What we're doing that's different is we're producing a very high quality product. And the benefit of quality is it means lower performance issues and no need for reprocessing. And doing that with a better ESG benefit. Now, even just 18 months ago, ESG was a nice thing to have. But it's actually driving behaviors now from electric vehicle makers. Electric vehicle makers, particularly in the European Union, need to get a low carbon footprint. And if they don't, they get penalized. And any other environmental benefit they can add to that is an excellent thing to have. So much so in our conversations, that's the very first phase of due diligence. What is your energy usage? What is your waste recycling? How much water do you use? How much is recycled? What is the overall carbon footprint? Because they need to add that to the whole supply chain. And it's changing the behaviors. We could have signed a whole range of offtake agreements over the last 6 months, but we're trying to find the right partner. And that partner is actually being driven by the fact that we can actually deliver real ESG outcomes that are orders of magnitude better than others in the market. Now, that's not to say that there's something wrong with other lithium. And I mean, I'm not disparaging other players. We need all of this. The difference is the product we're going to be producing is actually what the market wants and needs.
On that commercial front, of course, a lot of it will still be market sensitive, but how are you going with some of those discussions, and how has the uptake been so far as you're preliminary with those discussions?
Well, if I could be quite bold, we would have just signed up any half decent firm in the middle of last calendar year if they provided some money as well. In the last 6 months, we could have forward sold the first 6 years of production at least 6 times over. And we've actually taken the pedal off a little bit just in the last few months because the field has expanded. There really is a realization now that there will be a shortfall and that the end users are looking for that ESG benefit. Now, as you say, they are commercial in confidence, but we reasonably expect to announce one before we finish our definitive feasibility study in the first quarter next year, and one perhaps soon after, or maybe there'll be two before then. It's actually quite an exciting time and completely different to even just 6 months ago. And so that positions our company well, and it certainly positions others in the space quite well too.
Talking about some of those timelines to help conceptualize it for the viewers, are you able to lay out what we're working towards? So we've got the DFS coming up, of course, a demonstration plant on site as well. How's it all looking and how's the progression?
No, that's an excellent question. So let's work backwards. In 3 years' time, first quarter 2024, we aim to be in production, producing at least 25,000 tonnes per annum lithium carbonate. To give your viewers an idea, that's about 8% of the current market, but soon, as that market expands, that'll be smaller. To get there, we need to initiate construction somewhere in the latter part of next calendar year. We're aiming for Q3 at the moment, and for financial close about the middle of next year. So to get that financial close, we need to complete the definitive feasibility study. We're targeting first quarter next year. Have a demonstration plant on site. We aim to have that at the end of this calendar year. We've got a pilot plant that's been running for more than a year in California. We aim to at least release at least one, if not two, of our off-takers. And most importantly, announce more about the debt financing. And that's progressing extremely well. We're starting to see interest from export credit agencies to give us long-term, low-cost debt, and very keen to see an expansion. And the expansion we're looking at, we'll be able to talk more about, but we're looking to actually double production soon after we initiate our initial production, just because of the size of the demand.
That was one interesting thing about Lake is, of course, this flagship Kachi project so far, it's only using, I believe, around 20 to 25% of the total resource. We'd love to hear how drilling's going, about the potential uplift to that 50,000 tonnes per annum, and also the future opportunities that may come out of it.
Back in 2015, 2016, we targeted projects that had real scale, and Kachi delivers in that. We pretty much control the entire basin. We've only drilled down in the bottom southwest corner. We've got a resource that we released in 2018, and for 25 years of production, only 20% is used. The reason we're drilling at the moment is to do a few things. One is to convert some of that into reserves for the definitive feasibility study. Another is to upgrade some of the resources so that we can include that for an expansion. And then third, we're looking at demonstrating more around the reinjection. Look, suffice to say, the resource, as we announced in 2018, it's open laterally, it's open at depth. To be honest, all we're really doing is just getting the data to support 50,000 tonnes per annum. We could probably even go again. We've just got to make certain we've got enough data to support that so that we can release those things to the market.
So many different moving parts. I wonder if you've had much time to reflect on the share price uplift in this past period. We also saw the Araya Capital report come out, $1.89 valuation on it. Love to just hear your thoughts about that and any other comparable valuations that you've seen.
Look, of course, any of your viewers need to take their own independent financial advice. We don't share that, but there is research that has target prices anywhere from 60 cents to $1.89 based on the expansion case. The reason for that is very simple. At the moment, we're trading, even though we had a significant share price uplift back in January, February, we're still trading around 15 to 20% of our NPV. Now, to put that in context for some of your viewers, normally at this stage, you might be perhaps trading somewhere between 30 and 50%. The market is up at the moment. And as we move through project financing and then into construction, that percentage of the NPV increases. And our NPV is 1.6 billion US. So that's over 2 billion Aussie. And at the moment, we've got a market value of around 400 million. So there's still plenty to go there. With an expansion case, naturally that NPV increases again. And Araya Capital opined as to what that might look like. Our closest peer that I've mentioned before is a company called Standard Lithium, and they're listed on the TSX and on the New York Stock Exchange, ticker code SLI. They're an excellent company. They're using direct extraction like us. They're perhaps 6-9 months ahead of us, and they have a project in the US rather than Argentina, but they only own 30% of their project, and they already have a market value over $1 billion. So I think there's still plenty to go. Now, people could say, oh, yes, but maybe valuations have taken off. There's too much exuberance in the market. I understand those things. But given that we've got an EBITDA line of about 260 million US a year, and we'll probably only use about 50 of that to service the debt, that is really quite a remarkable amount of cash flow. And then as we expand the project, it gets even stronger. So that's what underpins the Oriah Capital report and some others that we reasonably anticipate to be coming down the pipe in the coming months. I think we've got a long way to go just on a comps basis here and now. And we're very keen to deliver that and actually deliver really what's going to become a major project. It'll be one of the top 4 producers globally.
Look, we've definitely touched on it throughout this conversation, but would love to just hear you sum it up. Often viewers have that question of there's so many different lithium projects out there. What is that special sauce that really sets Lake's project out apart?
I just want to reiterate that the demand that we're seeing over the next 10 years for lithium, and there's been such underinvestment in the lithium supply space, I think it augurs well for any of the stocks in that lithium sector. But Lake took a view about 3.5 years ago to do something different. And that was to produce a consistent, high quality product, which delivers a very healthy cash margin. And the only way to do that is doing something different. And that's using a new technology. Now, it's not the whole flow sheet. It's just the front end, what we call the Lilac ion exchange process, which is a well-known water processing method, just adapted for lithium. But that's why we can produce a high value product. And in the act of doing so, we can deliver that genuine ESG outcome. And it's not just greenwashing. I mean, we're talking orders of magnitude smaller footprint. Instead of tens of square kilometers of evaporation ponds, we're talking something the size of 1 or 2 city blocks. We return virtually all of the water back to its source. We continue to have a small CO2 footprint because we're using a solar energy PV farm that we intend to install. They're the sorts of things that drive the decision-making process of the end user. So when push comes to shove and we get into production, I think the market's going to see that we've got the right offtake partners, the right debt financiers, a right product that produces a healthy margin, and then we can probably expand again or develop the next project. There just aren't many companies around that have got that sort of flexibility. I have to say, sometimes I have to pinch myself that we've come this far in 5.5 years, but just watch the next couple of years. It's really going to go, it's going to be quite impressive.
It echoes what you mentioned in our last conversation when you said, watch this space, it's going to be exciting. Love to hear your thoughts now. If we're looking out ahead in 12 months time, what are some of those growth drivers that the viewers and prospective shareholders should be looking at for the ASX LKE story?
All right, so if we cycle forward 12 months, we're now going to be in the middle of next calendar year. So we'll have announced at least one of our offtake partners, if not 2. And you can reasonably expect that to be a very well-known global electric vehicle maker associated with a well-known battery maker. We'll have announced debt funding from 1 or 2 sources together with their international bank panel. And they're looking to provide around 380, 400 million of the 540 million US that's required to get this project into production. And that debt will be over 10 years and it will be priced very finely. We're talking indicatively somewhere around 3%, which is a whole lot less than normal producers that'll be looking at 15% debt. We'll have a definitive feasibility study finished, probably the approvals either complete or close to complete, and so ready for financial close. You could reasonably expect other brokers to be following us, perhaps even a US uplisting. We're looking at moving on to one of the main boards there as well as a dual listing with the ASX. So there's a lot of things coming down the pipe that are key catalysts and key value drivers. And then on top of that, we regularly get asked about our other projects. And so we'll probably have more news on at least one of our other 4 projects in Argentina. So very exciting time. Thank you very much for the opportunity. The ticker code is LKE. Please look at our website, lakeresources.com.au, for further information.
It's always a pleasure, Steve. There's so much to look for. The sector's continuing to run hot with a lot of demand. Thank you so much for joining us on the channel.
It's an absolute pleasure. Cheers for now.
It's always a pleasure catching up with Steve and unpacking the Lake Resources story. The lithium sector has continued to run hot. There's increasing demand as we see this EV adoption picking up pace. We'd love to know your thoughts as well, so drop in a comment below what you think about Lake Resources and where do you think ASX LKE heads from here moving forward. If you did enjoy the video, don't forget to give it a thumbs up. Feel free to share it out. This past period, we've interviewed a range of different ASX CEOs, so we'll leave links to those up above that you can check out after this one. We're the ASX Investor Channel and we make daily videos talking about the stock market, investing, and we find and analyse the best growth stocks. So if you haven't yet, hit that subscribe button. Make sure you've got your bell notifications turned on as well, so you won't miss a daily episode, and we'd love to have you join the community. It's a fascinating space, and Lake Resources have got an innovative take with their direct lithium extraction methods. Thank you for joining us. For now, stay well and happy investing.